Hi, everyone. My name is Donna, and welcome to the Bookkeeping Made Simple podcast. This podcast is designed for the entrepreneur and the dynamic individual who really wants to make a difference in whatever field they're in, whether they're an employee or a business owner. This is for the doers and shakers. This is for people that want to make the most out of their life. One of my very favorite quotes, by the way, is from Andy Frisella, who says, "Personal excellence is the ultimate rebellion." And I'm here to help you achieve it. By the way, I am not where I personally want to be in my business, my life, or anything, my relationships, but I'm striving for it. And so I want to kind of share my journey with you. So this is designed for business owners, entrepreneurs, curious individuals, anyone who wants to know how to be a better person. And in order to be a good business owner, I do feel like you do need to cover health, wellness, and nutrition, as well as bookkeeping, accounting, and tax. And although I don't do bookkeeping, accounting, and tax are my wheelhouse, and that's what I do for a living, but I also believe that mindset and nutrition and things like that are just as critical to business ownership and leadership as knowing what your numbers are. So, but today we are going to talk about numbers. We're going to talk about tax returns. Tomorrow is I'm recording this on March 14th, 2024, Pi Day, if you follow that kind of stuff. It's also the day before the corporate tax deadline, which is March 15th every year. And I want to kind of cover why business taxes are more costly and have an earlier due date than personal taxes. You know, taxation scares a lot of people. That's unless they are kind of in that world, people get really nervous about filing taxes, owing taxes, getting a tax refund, making sure everything's on time. They worry about penalties and interest. Are they getting the best deductions? Are they taking every credit they can, that they legally can? And the whole thing really seems scary to them. It's not scary to me, but I live in this world and I've been educated for it. So what we're going to talk about here is, again, I had someone actually tell me that he had an S corp. So we're going to talk a little bit about that. He had an S corp and he was charged more for his business tax return than he was for his personal tax return. And he was actually quite offended at that. So I want to cover this because he is the first one that I've talked to that's been really upset that business tax returns are more expensive than personal tax returns. But because one person mentioned this to me, I figured there's a lot of people out there that have kind of the same, maybe not the same question, but the same thought about it. That he said his tax preparer charged him more for a business tax return just because they could. And so I want to cover this. It's important to understand that at its core, business tax returns, even the seemingly simple ones, are much more complex than personal tax returns. They also have an earlier due date. So typically, personally, I will do all of my corporate tax returns first. I won't even, unless if I have a S corp return and then an individual return kind of at the same time, it's the same person, I'll do them all at once. But typically I'll do the S corp returns, the partnership returns, and the C corp returns first. I won't touch individual returns until after March, until I've either completed them or after March 15th, whichever comes first. The reason for the earlier due date is that if you are a partner or a shareholder and you receive a Schedule K-1, which shows your share of the business's income, it's net income that you need to claim on your tax return. you need that before April 15th. Okay, so again, Schedule K1 is what we send to people who are either a partner or they are a shareholder in an S corp. They need to claim that amount of income on their personal tax returns, because S corps and partnerships are what we call flow through entities. So we have an earlier, and then for C corps, there are also documentation that we need to get out to the shareholders that they need to have that before the April 15th personal tax return deadline. So we have to get those done sooner. They're also more complex. For one thing, there's a lot more to know about business tax credits, business deductions. What is a business expense? What can you write off? What do we need to show as an expense in your QuickBooks file versus what can actually be claimed on your tax return? How can we maximize or minimize your tax burden and maximize your tax savings? And while that's a concern on personal returns with the W-2 income we don't have as much leeway. But with a business, we need to know the tax code, and we need to know it very well. It's also about strategically navigating those tax laws. Now, you may not see it. You may just look at the return and say, you just filled out a form. Okay. Well, number one, the form themselves are way more complex. So when I go to pay, because I have to pay for the returns. So when I go to pay for a business return, I also get charged more because the returns themselves are much more complex in a business setting other than a sole proprietorship. So we need to make sure that we're navigating the tax laws, that we are making sure that the business is not paying, or the business or the business owners are not paying any more in tax than they legally are required to do. We want to make sure we're following the tax law to maximize tax savings. We also want to make sure that we're strategically leveraging opportunities. And we want to make sure that business is compliant. So, and this is where a lot of, I think, entrepreneurs and small business owners really get tripped up, is they think that they don't understand how much knowledge you need to be able to do a tax return, do it accurately, and minimize the chances of it being audited. We've got to make sure that the business never gets penalized for non-compliance. So when we're doing tax returns, there's a lot we have to stay on top of to make sure that those tax returns are done correctly. By the way, if you ever hear the word guaranteed with anything to do with your money, run, because there are no guarantees there. I can guarantee that I will do my very best to make sure that those returns are completely accurate. But this is one that I get frustrated with H&R Block, the big green block. They say they guarantee accuracy. I'm like, well, do you? Can you? So I always worry about the word guarantee when it comes to something as challenging as taxes. I absolutely am trying to make sure that my clients pay the least amount in taxes. I absolutely love it when I can call them and say, you're getting a refund. Love that. But I can guarantee that they will be accurate as far as the information I'm given. But that's as far as I can guarantee it. So business tax returns immediately, just by their very nature, are more complex. They take more knowledge, they take more skill, and a lot of times they take more time. There's things that we have to report on a business tax return that, and by business, I'm going to specify partnerships, S corps, and C corps. Sole proprietors and single owner LLCs can be reported on Schedule C of the 1040. They're a little bit more straightforward, but not necessarily. Okay. There are deductions we can take in the corporate, so S corps, that we cannot take for sole proprietors. There are taxes that sole proprietors need to take that S corps are exempt from. And I'm talking more about S corps because I have a lot more S corps than I do C corps. And they're different entities, and I'll talk about those another day. And I've talked about them before. But C corps are taxed differently than S corps. S corps are taxed differently from partnerships, and all of those are taxed differently than a sole proprietorship. So, first of all, we have an earlier tax deadline. I don't have 4.5 months to do business tax returns. They're due tomorrow, March 15th. So I want to make sure that those returns get done first because it's an earlier deadline. I also need to make sure that I'm aware of the tax code, that I am researching if there's any discrepancies anywhere, if there's a question about how to save money on taxes. I also have to know how to research accounting standards, the IRS website, how to make sure that, one, I want to follow the tax code. If my client is ever audited, I want it to be defensible. And by that, I want to be able to say to the agent, well, according to this, on the IRS website, in the tax code, they can do that. And it's perfectly legal, whatever it is. If there's any gray area, and there's a lot of gray, this is why, by the way, I say AI is not taking over accounting. There's so much gray area. There are judgment calls, and there's no AI that can make a judgment call. So there's judgment calls. There's times when I could tell one client, this is the best thing for you in your unique situation. And I can go to another client who even has the same business entity type. Maybe they both have S corps, but another one, because of the nature of their business, might not be able to take the same deductions as the first client. So I need to know the client. I need to know their unique situation. I need to be able to research the tax code. I need to be able to make sure that anything I do, I can defend to an IRS agent. And at the same time, I have clients that are not risk averse at all. That they love, making sure that they write their income down as far as they can. I have other clients that not so much. They're a bit less. They're a bit more risk averse. They don't even want to take the chance, and that's fine. But in business tax returns, we have more leeway here. So we need to know the tax code. We need to be able to tell potentially an IRS agent that, yes, what I did on the tax return is correct according to the tax code. And I also have to be able to cite that chapter and verse. This is kind of where I get kind of frustrated with some people, is that they seem to think all I'm doing is filling out a form, and that's not true. There's a lot more that goes into it. I have to know as well, like I said, what is deductible? And if it's in that gray area and the client wants to deduct it, how do I justify it? So travel's a good one that I get asked about quite a lot. So in the case of travel, if you are traveling for business, let's say you are going to, a couple of years ago, I went to Louisville, Kentucky, and it was for a conference. And it was really exciting to me because Louisville's only a few hours from my parents' house. So it's like 2 or 3 hours. I don't remember, not that far. So I was excited to go. And I was also excited to spend some time with my parents. I took Christopher with me because I had to get a hotel room anyway. And the only extra expense involved in that case was his plane ticket. So what's deductible? Okay, so we go to the conference. So my plane ticket's deductible. My hotel room is deductible, even though I'm sharing it with Chris and he didn't need to be at the conference. My meals are deductible at 80%. However, at the end of the conference, we went to the Louisville Cavern, the Louisville Mega Cavern, and we went ziplining. That's probably not deductible. Why? Because it didn't have anything to do with business. It was a great personal development thing for me because I'm terrified of heights, and heights and the dark were, it gave me a very strong adrenaline rush. And I do have a framed picture of me in my ziplining gear in the dark in the cavern, with a note that if you can zipline, if you can leap into the abyss, you can pick up the phone, you can do anything. So yes, I used it for personal development, and that was the reason I wanted to go ziplining, but it wasn't really a business expense. So as an accountant, as I'm doing people's taxes, I will talk to them about that. What was the purpose of your trip? Well, okay, you went out to visit family, and while you were there, you went to a networking group. Okay, well, we can deduct some of that, but not all of it. And those are things that I need to know as an accountant, as a tax preparer. There's, like I said, this is where there's a lot of gray area. Or I have clients that are real estate investors. They want to buy real estate. Some of them want to flip it. Some of them want to hold it and rent it out. So they're developing a business around it. And I've had clients say, well, I want to buy the real estate close to my children who have moved away. Now what? Okay, now I'm telling them, well, if you're going out specifically to look for real estate, but you happen to be visiting your kids because that's where you're looking for real estate, now we can deduct a little bit more. In fact, we might be able to deduct most of the trip, because now we can say the purpose of the trip was business related. And the fact that family was there was a happy coincidence. But you have to be able to be prepared to defend that in an audit. So that's part of the reason we charge more for business returns. It's a different skill set than it is for personal returns. Most personal returns are quite simple and straightforward. A few are a little bit more complicated. If they are day traders, for example, I will immediately charge more for that, because that immediately makes it more complicated. If you did a little bit of crypto here and there, that does raise the complexity a little bit, but not a lot. But if there's a business involved, it immediately raises the complexity. There's a lot more in the tax code that is specific for businesses that doesn't apply to individuals. So because they're more complex, even the ones that you think are simple are not. Even the most simple S-corp return you've ever seen in your life. I mean, even my partnership return with my boyfriend, with Christopher, is more complex than my personal tax return, because now there's two people involved, and we do actually have to split that. So we have to split any business losses. We have to split any business income. We have to make sure, and we have to make sure we have to make sure the balance sheet is right. And I also want to kind of address that too. So, so the business returns are very, very dependent on the bookkeeping. My C Corp returns that I had to do this year, I also had to go back and redo the whole year's worth of bookkeeping, because prior accountants had done such a terrible job with it. I thought it was important for me to go back in this one case and redo their bookkeeping, make sure everything was correct, review all. That's the other thing. And in a business, we have to report your assets. So when you're doing your personal return, you don't really report your house. You don't report your cars. You don't report your computers. You don't report your TVs. But when it comes to a business, now we have depreciation to think about. So for this particular client, I had to go literally down the list. I took their old tax return and I had to make sure that the depreciation that we already had accounted for in QuickBooks was correct so that I didn't try to depreciate the same asset twice. I also had to go over with them, what equipment did you purchase this year? This is what was on last year's return. What did you buy this year? We have to know about subsection 179, which allows us to expense certain fixed assets. We have to know about bonus depreciation, which allows us to also write down for 2023, it was 80% of fixed assets purchased in that year. So now, just again, simply by their nature, business tax returns are much more complex. And that's really why we charge more for them. That's also why you need to make sure that your accountant is very good and knows to ask these questions. Like I said, with this one client, they had gone through 3 other accounting professionals. 2 of them were CPAs, and 1 of them I knew. And the books were wrong. I mean, there just was no getting around it. So you want to make sure that when you're choosing an accounting professional, whether they're credentialed or not, that they are top at what they do. This is why I do encourage my clients to go over your tax return, ask questions. The other thing that I get a lot of questions on business tax returns, we have to report the balance sheet. And that means that the assets and the liabilities and equity have to match. If they don't match, I will typically put the difference in as a loan to or from the shareholder. So if it's an asset account that is lower than the liabilities and equity, I will say it's a loan to the shareholder. Why? Because it looks like that person took money out of the business. And if I report it as income, then we have a capital gains tax to worry about. Don't want to do that. But if I report it as a loan, loans are not taxable. So I want to make sure that I am doing it, 1, correctly, 2, for the best interest of my client, and 3, in a manner that it's defensible. Yeah. I want to do it correctly so I can defend it to the IRS. I want to make sure that I am keeping the tax burden as low as I legally can. And 3, I want to make sure the client's happy. Those are all really important. And one of the challenges that I see is it is difficult to figure out who to hire in the accounting space. Now, my personal philosophy, and I have talked about this in one of my live streams, is that the more people, the more competent you are, the better you are at your job, people will notice. So you want to make sure, as an accounting professional, I don't have a CPA license. And so that immediately makes it more difficult for a client to assess whether or not I'm good. However, holding a CPA license does not mean that person is good for your business. And I will talk a little bit more about the differences in different accounting roles. But I do want to emphasize CPAs' jobs are to certify public audits. So to certify the audits of publicly traded companies. So if you need an audit done, yes, hire a CPA. But not all CPAs are the same. If you don't need an audit done, you don't need to pay the premium for the CPA license. And I'll talk later about what it takes to become a CPA and why I did not choose to go that route. But you do want to make sure that the person that you're talking to is knowledgeable and thorough. So I've seen a lot of tax returns, and many of them done by CPAs, where somebody threw in journal entries to adjust the bank account balance to match the tax return. And that is wrong. As soon as I see that, especially if it's from a CPA company, I do advise the client to leave that company, because that's wrong. That throws off all the bookkeeping. If the bookkeeping's wrong, your tax return's wrong. There's other things that they do need to put journal entries in. For example, we need to make sure that depreciation is accounted for correctly. Any prepaid expenses need to be accounted for correctly. There's a lot that we do need to put in, but if they are putting things in the bank accounts or the credit card accounts that doesn't match the statement, then that's immediately wrong. It immediately tells me that they don't know what they're doing. Like I said, not all accounting professionals are the same. Not all CPAs are very good at taxation. Most of them do have their own specialties. And it's frustrating for me because I'm not credentialed yet. I will be taking the EA exam immediately after tax season so that I can then represent clients before the IRS. That's the whole reason of getting an EA. That means, by the way, EA stands for enrolled agent, and that means that they did pass an exam specifically on taxation. I'm still debating whether or not I want to go the CPA route. I'm not inclined to, because number one, I don't see that CPAs are any better at their jobs, and many of them are worse than for what I specifically do than I am, because my wheelhouse is bookkeeping and accounting, consulting, advising, fiduciary. So the things that I recommend to my clients, I don't want to do anything that's going to hurt them. Even if I didn't have a fiduciary responsibility to them, or even if I don't have a fiduciary responsibility to them, if the client is harmed financially, that reflects badly on me. It reflects badly on my business. So I want to make sure that I'm selecting tax strategies that are going to benefit the client without getting them in trouble with the IRS. Nobody wants that. And the simple fact of having a CPA license, it does mean that they're held to a higher standard, but it doesn't mean they meet the higher standard. So you do have to be thoughtful about who you select to be your accounting professional. This is also why I went ahead, I got an MBA and I got a master's of accounting, which means I have all of the, more than the education than the average CPA. I have all of, in fact, more than the experience. I just haven't done it under, I haven't done the internship, although I have worked under CPAs, and I haven't passed the exam yet. So I do plan to pass the exam. I don't know if at my rather advanced age, if I want to do an internship, but I might. With that, I'm going to go ahead and thank you for watching. Thank you for listening. If you're on Spotify, if you're audio only, I am looking forward to bringing more guests on the show and talking about topics that are important to you and trying to make them a little bit more interesting. I realize that for most people, accounting, especially taxation, is scary, and it's a bit like watching paint dry. It's just not people's favorite thing to do unless they're already in the space. So with that, thank you for watching. Thank you for listening. Thank you for tuning in, and I will see you again soon.